Hi everybody, this is Alex Deploy from Expert Forex, and I've recently received an inquiry from Sarah from the UK about the lot sizing inquiry, and I'm just going to read her letter. Could you please explain the volume box and the different lot sizes? Are these calculated depending on the amount of your balance, or do they actually refer to the actual amount, i.e. does one mean 10 pounds or one lot of your balance? How is one lot calculated? Okay, I'm going to do my best to answer that question. There are two other questions which I'll answer in another video, but we'll spend some time on this. And this question is actually a lot more involved than you might think. So I'm going to go through the whole process and give you a good idea of how lot sizing is done. Right, let's see. Okay, I'm going to take again the example of this deal that we're currently in on one of our alert services. As you can see, the price has made a beautiful head and shoulders formation, and we are basically entering, or have already entered, on the breakout of the neckline, and we are currently in a deal. The stop is at the previous high, the shoulder high of the breakout, and our target is right down here, determined in some other fashion. But what I need to show you is how did we go about lot sizing for this particular deal. Let's go straight into it, and I've got a little lot size calculator that I use. You can actually do all of this on a piece of paper with a pencil, so there's nothing complicated about all of this. Firstly, to answer a portion of your question, 1.00 lot refers to $10 per pip. And I'm assuming that we're trading something like the euro. Some of the other currencies might be slightly different, $8 per pip, but in general it refers to $10 per pip. Obviously, if you've got a pound account, that would be 10 pounds per pip. So if you trade one lot, each pip will be worth 10 cents. So this is what we call a main account, this is what we call a mini account, and that is what we call a macro account lot. 0.01 is a macro account, 0.1 is a mini account, and 1 is the main account lot. So that's how lot sizing, the lots work, and the value of the pips. So let's relate it back to this transaction that we have here. This transaction is quite a big one. We have a stop of 64 pips here. The spread on this particular transaction is about 3, so we got 67 pip spread on this transaction, and what we now need to do is go back a little bit and say, all right, how much capital do we have in our account? So that's the starting point. How much money have you got in our account? And let's assume you have $4,900 in your account. Now the next step is, how much risk are you prepared to take on every deal that you do? Now I certainly very seldom go over 1%. I sometimes do 2%, but 1% is a good starting point if you are trading your own money. And only when you have a very good successful record should you increase that to 2% or 3% or 4%, but certainly start out with 1%. So I'm going to give the example of risking 1%. So 1% of your capital, your maximum risk that you can have is $49. Now we've just worked out that the stop is 64 plus 3, so 67 pips. So we enter our 67 pips here, 67 pips, and the calculator calculates that we can enter 0.07313 lots, but remember the broker only goes to the last two, so you can enter 0.07 lots. Now if your account was bigger, obviously then that amount would be bigger, but it's a very simple calculation. All I've done is I've divided the maximum amount that I can risk on this trade, which is $49, and the risk that I'm taking on a single lot is 67 pips. So therefore it says no, you can only trade 0.07 lots. Okay, so what does that mean? So it means if when we do open a trade, we then enter 0.7 lots into that into the volume. Now by doing that and entering the the stop values and the entry values that I've just shown you, you are assured that your transaction will never lose more than 1% of your account. In other words, you can sleep quite restfully. You don't have to watch this transaction for a long time, because it's not going to ruin your life losing 1% of your account. It will, however, if it goes to the target, you can see you could most probably make about 3% on your account, but that's not the topic of this particular one. So let's just go back to the question that was asked. And okay, so could you explain the volume box? So that's what it means. You manually enter the volume as you've just seen me do. And are these calculated depending on the amount of your balance? Yes, as you've seen, I've taken the balance of my account, applied the amount of risk that I'm prepared to do, and it actually, you then calculate the lot sizing. It's based on the lot values that you have, depending on whether you've got a British account or an American account, and which currencies you use. And that is how you actually manage the lot sizing. Now, if for instance the lot, if you were willing to risk 2% of your account, then your lot sizing, as you can see immediately, it means you can risk $98, and your lot sizing then goes to 1.4, and you merely just type in there 1.4. physically type it in, and there you are. Right, that means that I can only lose 2% of my capital, and I can actually sleep quite easily. So just looking at your question, hopefully I've answered your question. So before you even open this box, do a little calculation on a piece of paper. Say, what is my capital? What is my maximum risk that I can have? What am I risking on this transaction for my stop? And it will then tell you how many lots you can calculate, you can use. So for me, Alex Deploy, Sarah, thank you very much for your inquiry, and from Expert Forex, cheerio, and I will be answering your other two questions in a further video. Bye.